You're like a circle that floats around me, keeping me safe and sound. And when I fall, you tied a rope to me. You're blessing me every day. I was down with an illusion, like a sparrow with broken wings, but now I shine with your reflection on me. I'm getting.
Hey guys, Barry here. I'm the head trader at Elite Trading LLC, and today here I am with another lesson. So, as most of you guys know, we started a 5-day series on YouTube. So the first day was psychology, where we talked about some of the, like the most important thing in trading really is psychology, right? But with that, comes what we're going to be talking about today, which is the number one, account killer, like marriage, issues, like whatever you want to call it, which is called greed, right? So this is so common in trading, and guys, the results, I have not seen any different results, with people that deals with greed, right? So it's a really, really bad thing. So and then when it comes to trading the markets, there's an old saying that goes like something like this: like the bulls make money, bears make money, and pigs get slaughtered. So it's basically calling the greed people pigs. You know what I mean? So traders are greedy if they do not accept profits because they believe a trade will continue to go in their favor indefinitely. So another thing, greedy traders do is add to position merely because the market has moved in their favor, which is something I'm 100% against it. So that's not something I do. That's not right something I recommend, right? So nevertheless, you can add your trades for reasonable price action based reasons. Price action based reasons, like a retest of a support, right? Or a confirmation of a continuation, right? But it all depends if you're trading options. If so, it's like which strategy you're trading. Or are you just trading long calls like short puts, debit spreads, credit spreads, broken wing flies, butterflies, iron condor flies, condors, like diagonal calendar, I can go on and on. So, and if you're trading equity, right? Because the beauty about equity is it doesn't mount. What I mean by that is, okay, so if you bought, the equity today, if it takes like 6 months to go up, right, you're not losing money each day, right? You have like your bag holding, right? But you're not losing money. As if you're trading options, every day that goes by, we're dealing with a data decay, which there's a way to get through the data decay, which comes by selling premium, right? Or selling Vega, which is based on volatility. So, which is like really advanced, trading, options trading strategies, right? So, what is the best way to deal with greed? It's by number one, planning the trade. Sorry about my handwriting, guys. Number two, I want you guys to write this down, right? Trading the plan. The plan. Number three, setting up realistic targets and paying yourself on each one of them. Start paying yourself early, guys. I'm always like, especially for trading options, you know, like that pop, when it's popping, when it has momentum, that's when you sell, right? If you bought calls or puts, that's when you sell, when it has momentum to the upside or to the downside, right? To buy the opposite, right? You go counter move, right? And then having a proper, you know, giving the proper standard risk. Standard risk. So, guys, if you guys don't know this ahead of taking the trade, right, you guys are going to get slaughtered. You guys might make money today, tomorrow, but on the long run, you guys are not going to get anywhere. So, I'm going to give some real, like, examples here, right? And I'll actually, yeah, I'll give some real examples here. It's something that you guys have to, you know, come up with your own, right? Like risk to reward. And then let me just write here on the text box. I think that's going to be so much easier if I do that, right? It's going to look so much better. Let's just use a toss, the text box here. Okay. So number one, so predefine the risk to reward ratio. So what means by that is, right, it all depends on the stock you're trading, right? So I only trade stocks that are heavily traded by institutions. I don't trade low floaters. I don't trade, you know, penny stocks. I don't trade, you know, it's about 12 to 15 stocks, you know, 12 to 15 tickers that, you know, there's extremely high in liquidity. Institutions are all over them. I'm not going to have like, you know, the pump and dump, you know, issue like most people do, right? Most people that are, you know, members of, you know, penny stocks, like, you know, chat rooms, right? Your instructor goes and, hey guys, I'm buying so and so. He goes and buys like 100,000 shares, and then all his students, you know, goes behind him and buys the stocks. He sells it right away, and then his students get stuck with like not having buyers, right? So that happens a lot. That's actually normal on the penny stock world. All right. So predefine the risk to reward ratio. Let's say, okay, you're willing to sacrifice $1, you know, to make $2, right? You're willing to sacrifice $1, you know, to $2, or, you know, like 70 cents to 210. So by doing that is you're stacking the odds in your favor big time. You're really, really, really stacking the odds in your favor. And I'll get deeper, you know, as to why, right? So how do you predefine, you know, risk? You know, like in this case, I'm only, you know, using examples of, like, in this case here, I got Apple, right? So Apple, It's a heavily, you know, institutionally traded stock. Extremely liquid, right? The volume is always, you know, amazing, right? So, but there's a way to, and then it's just like, Billy, how do I set, the proper, standard risk? Because the thing is, a lot of times what happens is, right? Let's say your standard risk here was 75 cents, which is nothing for Apple. It's extremely, it's not, right, a proper standard risk if you want to make money, right? You probably, if you're not really professional, with the entries, you probably get stopped out like 99% of the times. But a lot of times, so let's say your standard risk is 75 cents, and then it hit, like, you get stopped out, and then the total drop was, let's say if you're buying calls or going long, was 82 cents. So you got stopped out because of 7 cents, right? Was that worth it? Absolutely not. Do you guys agree? So what is the best way to have an idea of, how much, like, wiggle room you should give, right? And then some of the stocks, guys, it's just like, it's not meant for day trading, for, depending on the account size, because Apple is not a cheap stock, right? It's not a cheap stock to buy. So if you're doing 2-to-1 on Apple, right, you're risking 100 to make 200, right? So that's why, it would have been nice. So in this is what you do, guys. So this is when we use some indicators, right? So there's this indicator of mine here, ATR day range. So which it's pretty much telling me the intraday, right, for the past like 10 days. I was using 5 is a bit, right, too tight. So it's $4.06. And then what else can you do? You go into the auction chain, right? And then you type in Apple. Even though, if you guys don't trade options, right? If you're planning on in day trading Apple, the expected move for today, as of right now, it's $2.83, $3. So, and it's already the range. It's already within, almost like within the past like 10 days, right? So, what is the proper way to trade Apple? As a matter of fact, let's trade something else here. Let's look at something else, right? Okay, let's see if we got a fractal play here. I think we do. I think we do have a fractal. Okay. Yeah, but we're talking about greed. We're not talking about fractal plays here, but okay, yeah, let me just erase them. So yeah, this is my projection and rejection system that I came up with. So basically is, okay, so what's the proper standard risk to give on Apple, right? So the way I'll do it, like at this time of day, is, okay, the VWAP. You have the 5 EMA right here. This is where the 5 EMA is on the daily, and the 50 EMA, right? If it breaks the VWAP, the place it will most likely hold is this place right here, right? So, and then just pay attention to this, guys. So institution traded stocks, I'm not talking about penny stocks. The closer it is to half in whole numbers, for an example, 135, 135.50, 136, the better, because you can you can easily get 50 cents here if it's going to continue down, right? So, and then what you guys need to do is plan the trade ahead of time, right? And then it's just like, okay, to the VWAP, 135.09, to the 50 EMA, which happens to be a double top right here. So what's the distance, right? The distance is about 41 cents. You like pretty much you basically be risking 1-to-1 here. Okay, getting off the VWAP, selling, on a pop to the 50 here, right? And then what do we see here, fam? We see a volatility compression pattern, right? And consolidation, which means that there's a squeeze coming, right? This thing is going to go either way very shortly, right? So, and then at this time of day, if you're day trading, right? So equity, this would be, okay, a good, right? An okay risk to reward, right? So not a great risk to reward, but an okay, because there's not enough juice there to day trade. So you'd have to use a lot of size. And for options, it's just like not enough, not enough for for beginners. I'll look for more like time and distance. So, but to make a long story short here, guys, is this. It's just planning the trade, trading the plan. It's not because your risk to reward was like, let's say like 210. It's not because it hit your target that you're going to bail the trade, but it means like, okay, you're going to be selling as it's popping. And then if it breaks your target to the upside or to the downside, right, you hold runners until you get stopped out. You can either set a trailing stop, or you can it's not working properly here, or you can I like this trade here on Apple. We get a pop here. We'll definitely get a pop here from the VWAP. So for options, if you're trading one contract here, not so good, right? So look at the volume. So where's the volume at? This is the 10-day, right? The 10-day simple moving average. So it's a 1 mark confirmation, like on the volume. So okay, if you break the 9 here, so what's going to happen is this. It's going to break the 9, I mean the 5. If it breaks the 5 here on the daily, we'll be looking for a pull back into the 5, a hold, and then this can push all the way up to the 9 easily, right? It will depend on the market, which is at 137.92, which is a great trade, right? So but if I'm trading options here, or a huge size of shares, right, the 50 EMA, as it's popping into the 50, I'll definitely be selling some and keeping things tight, right? So, and okay, what EMAs am I using here? Just the 9 EMA for for momentum, and the 50 and the VWAP. I can get rid of the 9. I don't even need the 9. The 50, you can get a lot of good trades off the 50, but the VWAP is enough, guys, if you guys are trading real stocks, right? So how, going back to what we were talking about, right? Greed. How to get rid of greed. Right? Knowing exactly where you're going to get out. And knowing, for an example, we're targeting the 50 here. We're selling as it's popping. Once it breaks the 50, where's the level that we should be looking for? This level right here. And this is going to be, guys, okay, then make it or break it. If it breaks this to the upside, this is our stop. If it just comes up here and then it breaks the 50, right, this 135.42 level, we're getting out. you're keeping your profit, right? Not being greedy, guys. So, you know, base hits and singles and doubles, guys, that's the name of the game, right? So, who doesn't like to grab big trades, right? We all do, but until you guys get up there, right, at that level. So, okay, the 50 here is a place, right? It's a place to sell some, and then the next place is, okay, let's just manage this trade here, which happens to be pretty much at the 50, right? 135.40, 135.42. And like I said, 135 and a half, guys, right? Half and whole. I didn't mention that, right? You can always get a trade from 135 to 135.50. It could reach the 135 by a few pennies. It could not get to the 135.50 by a few pennies. That's why as it's popping, as it's pushing up, you guys are selling. That's key. That's extremely important, guys. So it's holding the 9 here, right? In this case, since we entered at the VWAP, right, I would not give a standard risk here. So if it breaks the VWAP here, so with whatever I'm holding, I'll get out, right? Because that's how you guys get rid of the greed, guys. Because you guys are going to be waiting for this thing here to pop all the way to the moon, and it could go the opposite way until you guys figure out the move prior to the move. That's what you guys have to do. And look, right into the 50 MA, boom. What are we looking for here? Boom, let's say we sold half size. Boom, we got half. We're looking for a break of this level. Oops, sorry, my marker is not. A break at this level and a pull back into this level here. Then we have a lot of resistance over here, right? And then if it breaks the 50 here to the downside, you guys are all out. Profitable trade. Free and profitable trade. That's simple, right? And then looking at the sell volume here, look, this is an indicator on mine that shows like the buy and sell signal, right? There's a fight there, right? In volume, just pay attention to the volume here, guys. We're starting to get like above average volume, right? This candle here, we had a lot of volume compared to, right? So it's starting to look good, right? So, all right, where's the next level that I'm looking for to bring this trade to? It's this level here, right? But we have this level here first, which happens to be the 135.62. I'll use the 135.50. Yeah, I wouldn't, because it's too close. This one's 73. Yeah, I'll just focus on the 73 here and see if it continues to get bought up. So like I said, a pull back to the 50 here, it's expected. It's the move prior to the move. And in order for it to come down, we need, let's see if that already happened. No, that didn't happen yet. That happened here, but it didn't happen. Yeah, it kind of happened right here. But it's bullish. We have to pop into this level here, guys, if it's going to come down. This level and this level here. Okay? This is the move prior to the move system that I've developed, that I cracked the code, and that's it. So I'm just right here because I'm gonna stop this video, and whenever it hits the target, I'm gonna come back and be like, guys, I told you, right? Target 1, since I already paid ourselves, right? And target 2, T2. And then I want to ring. And like I said, a break of the 50 would get me out here, right? But eventually, just to keep the profits, because usually, right, you're risking some to make some. But since you already made some here, right? Okay, holding the 9, it's still pretty bullish, right? But I would look at the overall trend How do you look at the overall trend? By zooming out, like, and then you figure out, like, okay, so this move here, we already had a retest. This move here, we never had a retest, but we got close. This here, we got a retest. Yeah, we have everything we need to pop here, right? To the T1 and T2, 135.73, 135.99. Let's call it 136. Remember, we got in at 135, right? 135.09-ish. I didn't personally get in, so this is just a mental, right? A mental, yeah, just a trade where you would have taken the trade. So, and this is the perfect example, guys, how to, right? How not to be greedy. It's just knowing where you're gonna get in, where you're gonna sell, where you're gonna get out, where you're gonna get out, and where you're gonna get stopped out, right? So, in knowing your risk, is it 1-1? Is it 2-1? And then, okay, what time of day is it? Okay, 12:30. So what's the volume usually at 12:30? Is it the reversal time? Because it changes a lot, right? Before, it was like trading, it was 9:30 to 11, and then 2:30 to 4, because institutional traders were on lunch from 12 to 2, and then at 2:30 the craziness started. But as the day goes by, right, every day that goes by, there's millions and millions and millions of AI, right? Computers, artificial intelligence computers, taking trades, buying and selling stocks, right? And doing things to trigger stops, right? When you see like those big algo candles, it's just like to trigger stop orders that they have access to, right? And then you see like the big algo, the big wick, and then it comes right down. And then look, I consider this the target hit, right? I would have sold somewhere right there, boom. Right now the 9 crossed the 50. Okay, we should expect a pullback here to 135.40, to the place where we paid ourselves first. It's totally expectable, right? Then see that, right? So let me just draw this down, right? Because everything here is live, right? And then at the end, I want to go over this with you guys and just show you guys that know me, you guys know that I call these moves to the panties, and I'm right 99.9% of the times. But for the people that don't, just to assure them, right? So, and that's why we've been seeing, like, even when let's say a holiday week, like during the week it's a holiday weekend, we see volume, we see a lot of trades taking place, and we wonder, man, what is it? Institution traders, they're their way, but no, it's the artificial intelligence computers. It's just the AI taking place, guys. Every day that goes by, it's millions, millions, and millions of dollars spent on artificial intelligence that it's not even funny. Like, the amount of money that they're investing into the game, it's ridiculous. But hey, I still have the formula to beat them every time, right? So they already became a client, right? Beat them every time. So and yeah, guys, just write this down. At least like 135.99, 136, right? You could actually take out the high here, but hey, I'm only gonna do to T2 here, and then just like, yeah, I'm gonna wait another 5 minutes, and then just I continue to dig deep into greed. So the most important thing is, right, if you guys are having a hard time being profitable, being consistently profitable, set like small daily goals, right? Be it $50, be it $100, be it $200, whatever. So, okay, once you guys hit those $200, let's say your goal is $200, but man, I took this trade here, I made 350. So, okay, you have two choices here. You stop, you're done for the day, or what you're gonna do is, if your goal was 200, you made 350, that means, look here, guys, to the penny, right there, almost, right? If your goal was 350 or 200, you made 350, that means, okay, you made $150 in tip. And this tip here, you could be like, okay, right, I'm gonna split it with the, with the business, right? I'm gonna take $75 for my hard work, and I'm either gonna take a $75 trade if you're trading options, or if you're trading, equity. Oh man, for equity, I wouldn't even do anything, because if you're trading, because my rule is, literally get a 75-cent contract, that if it goes to zero, you still made $275. You're $75 ahead of the game. But that means is, it's not like you're just gonna take any trades. You gotta have the setup. You gotta have the trend, the pattern, and the compression or the squeeze, right? Or it's a reversal, right? You got to have the edge there. Don't just take a trade to take a trade, right? When it doesn't make any sense, when you don't have an edge. So by educating yourself like that, guys, so greed is not going to take over. Greed is going to vanish, disappear, right? So and size properly, guys. Use a certain percentage, right? So, right, one of the things that I highly recommend is, okay, let's say you're starting trading, like tomorrow, right? You made $125. Let's say you started trading today, you made $125. So you're $125 green, right? On your next trade, what you do is you take a trade risking to lose 62.50. So, okay, instead of taking a big size, you take a smaller size where your standard risk is the same, as far as, right? The idea is to at least like build it to $500, right? Build it to $500 or $1,000 in profit. It would be much easier. Just building it up to, okay, 1K in profit. This is the house money. Oh, dang. Okay. And then, per trade, you're going to risk losing 150 to make 300, or risk 100 to make 200 if you're day trading, right? So that means is, okay, if you have 10 losses in a row, right, you're still going to be even, right? And then if you're 50% right, 50% of the times you're right, you're still like up 100%. You understand? So because like if you're up like 50% of the time, so you're still gonna be like, oh, like at the end of the year, thousands of percents. The math is very simple here, right? And okay, I'm just like filling in the gap here just to see, like, okay, just to see what it said happening, right? T1 already happened here. And the best thing to do is do this live, guys, because after it all happened, if I make a video here, and it's just this guy recorded it, this guy this guy that, and then I'm not that type of guy, right? So, but okay, guys, getting rid of the greed, it's that simple. And the next subject that we're going to be talking about is fear, right? So that's our next lesson. So by the time I'm done with the five lessons, you guys are going to be, if you guys listen to 50% and apply the things that I'm saying, is right, you guys will buy me a beer, right? Even though I don't drink, you guys will succeed because it'll make a huge difference. Let's say you're up 1K on your account. Okay. So out of 10 trades, you made $200. So which equals $1,000. And then the total 20 trades, right? In 10 trades, you reached your stop $100, which equals so like 1K. Okay, 2K minus 1K equals 1K. So now you're already 100% profitable from the first K that you made. And that's just using a one-to-one on a bad day like this, guys, right? So it's actually not a bad day, but it's bad time of day, right? So it actually gets much better, guys, right? And much easier. And like I said, just look forward to my next video. So because it's going to be really helpful, and then it's going to be the best way to start 2023, guys. And then I'll be getting into those of you that trade futures. The concept, it's pretty much the same. Right, it's just knowing which instrument you're trading, and then the wiggle room to give per instrument, and so on. So yeah, I'm just waiting for it to hit the T2 to hit here, and then yeah, we pull back to the 9 here. It's then that is totally expectable. And I apologize, guys, for my dog in the background. So like I said, right, please, if you watch this video, right, do not just watch it halfway through. If you think that it brought you something new, right, if you learned anything out of it, please just like, comment, subscribe to my channel, share with the people that that may need help in dealing with the same issue. And then I promise you, at the end of the 5 days, guys, you guys are going to be a much better traders, and 2023 is going to be the best year of your life. And the first one, because it will only get better from there, right? So let's just look if this is the level where it's going to hold. We got very close to T2 here, right? Yeah, I consider this, to the pennies. On a $200, on a $135 stock, let's see how far it was. It doesn't mean it's still not gonna get there, right? Can bounce off the 50 here. So 86 to okay. I was 13 cents off, guys. I apologize, okay? I apologize. I was less 11 cents off, guys. Right, you guys know who the GOAT is, right? Once again, guys, if you guys want to learn how to trade, don't learn from bouncers, don't learn from YouTube gurus that are out there just like flashing P&L, right? Learn from someone who really knows what he's doing. And remember, there's no such a thing as a holy grail indicator, none of that. And But at the same time, the thing is simpler than, right? We're just brainwashed that, we need all these MACDs, like the RSIs, and all these premium, indicators that they sell for $1 million. And listen, if there was a holy grail indicator, I wouldn't sell it for $2 million. Why would I sell it? I wouldn't sell it for $20 million, because you know what? It will only make me so much money, right? So, okay, stay away from premium indicators, right? So even though you guys can see how accurate, my early entries are, so it's still being developed, it's still in process, and then I just ignore it. You guys saw that I went just from the levels. That's all I do, guys. I trade the charts, and that's why I'm right 99.9% of the times, because I trade the charts. I don't trade an indicator, right? Volume, charts, and volume. That's the name of the game. There's no Elliott waves. There's no Fibonacci. There's none of that. Because what happens is institution already knows all of that. They're gonna trick you into thinking that, oh, that's wave number 5. Oh, that's the 6-to-1 point wave. Come on, guys. Just smarten up, right? Let's talk real. Let's be realistic here. And right, just try applying, right away what you guys are being taught. And I promise you guys that you guys are going to succeed. And what did I say? I pop into the 50 here, drop into the 50 and I pull back and I pop. That's exactly what happened, right? This can work now as a resistance. So, right, it's a quick head and shoulders, right? It can. Let's see what the volume brings us, right? So, but like I said, guys, please, subscribe to my YouTube channel, to my Instagram, to my Twitter, and I'm still trying to figure out what happened with my Facebook, right? Because I had agencies taking care of all of that, and there had been so many so many people just trying to stop me out, guys. You guys have no clue, right? But I proved all of them wrong, and you know what? Watch out for what's coming, baby. Every action, there's the reaction. Counter, right? All right, thank you all. You guys be safe, and I'll see you on the next lesson. I still want to see this happening here, but I don't want to make this video like 2 hours long. All right, thank you so much, fam. I appreciate it. Be safe. Yeah, guys, just decided to come back here real quick. Yeah, just to show, like, right, what I was waiting a minute after I hung up the video. Right, I stopped recording, it happened, right? Whatever happens after here, I don't care. All I know is I called this move here like a champ, like I always do, right? These ain't for bouncers. Bouncers keep on bouncing. Scammer. All right, guys, be safe.
You're like a circle that floats around me, keeping me safe and sound. And when I fall, you tied a rope to